the thing is with sustainable investing, it's not new. This has been around for a long time, but I think there's no question that there's been, a sort of coming of age when it comes to sustainable investing, and really sort of happened over the last, I'd say, 5 years. And I think there's a few core reasons for that. Last year, BlackRock, we did a survey of around sort of over 400 investors, and that represents sort of 25 trillion US dollars. So this is big pension funds, super funds. There's also financial advisors and other types of investors. And the one of the questions was, what are you doing when it comes to sustainable investing now, and what are you going to do for the future? And the results are pretty much saying, well, we're represented now, we don't think we're represented enough. And then on the back of that, the expectation was that we're going to see a doubling of sustainable investing over the next 5 years, so sort of to 2025. And then we get a bit closer to home. We broke it up into the regions, and we looked at APAC. At the moment, it's sort of just around 50% of investors think that sustainable investing is sort of central to their investment process. But you start to extrapolate that, and you get a lot more investors thinking that's going to become central to their investment process. And on the back of that, it's really around what type of risk that they're taking on when it comes to portfolio construction and portfolio building around sustainability. I think that's backed up when it comes to the flows. So there's no question that we've seen significant amount of flows into sustainable products, both globally and both in Australia. And I think there's an example of this. We can look at our sustainable iShares range. So even a couple of 3 or 4 years ago, we had sort of circa 25 products in sustainable ETFs. We've now got greater than 220 products, and that's continuing to grow. And from a assets under management point of view, that has grown 33% just this year to date. So we're now sitting around sort of US 130 billion, which is significantly greater than the whole ETF market in Australia. So there's no question that is the fastest growing segment in our ETF space. And I think partly that's because the demand, we talked about the demand, but it's also to do with the product choice. Investors now, compared to say 3, 4, 5 years ago, have that choice that if they want to build a portfolio, whether it's top to bottom of an ethical or sustainable type product, or they want to put bits of that into their portfolio, they can. I think the last couple of points are really around where the shift has happened from a perspective of, say, data and sort of the frameworks that are happening. So from a data perspective, we know that, again, from 5 years ago, the data is so much better now, and the understanding of what that data means from a portfolio point of view is so much better. So investors know what they want, and they know where they can get it. And I think that sort of flows into what the frameworks are. We know that the standards and frameworks are starting to converge from a global perspective. And I think this is really important, because what we don't want, and what we know that's, again, investors are saying to us, is that the element of something like a greenwashing process, where someone slapped a sticker on the front of a product and calling it ESG, is not going to work. So I think if you combine all those pieces, we know that this sustainability trend is now really going to be ongoing, not just the next 5 years, but over the next decade and in the future.